Wan Nur Hazirah binti Wan Saleh, presenter. First, introduction. The objective of this report is to assess the Petronas Dagangan Berhad PDB's financial performance from 2020 to 2024 through the ratio analysis, which is including liquidity, asset management, profitability, debt coverage, and also market values ratio. This helped us to identify the company financial strength and ability to adapt the market changes. Petronas Dagangan Berhad was established in 1982 and listed on Bursa Malaysia in 1994. It is the marketing arm of Petronas, operating more than 1,000 petrol stations and 900 kedai mesra outlets nationwide. PDB focused on retail, commercial, and convenience sector while also investing in sustainability through the Settle app and EV charging station. Next, for current issue, PDB share price increased after the Prime Minister announced a reduction in RO95 fuel price. This shows strong investor confidence, but the lower fuel price may reduce profit margin and affect the long-term operation. Next is the financial ratio analysis. First is the current ratio shows the PDB ability to pay the short-term debt. Second is quick ratio, give a clear picture by excluded inventory. Third is cash ratio, is the most conservative as it focuses only on cash. PDB remains financially stable and continue to gain investor confidence despite the challenge from fuel price changes.
My name is Faraoni binti Ahmad Khailani. Next, asset management ratio. For ACP advantages, show efficient credit management and strong cash inflow from customers. And disadvantages to strict collection period may reduce customer satisfaction and competitiveness. For the result and analysis of ACP, which is the best year is 2022, the fastest cash collection, which is 23 days. For the overall, the company managed to maintain a moderate collection period but should aim for more consistency to strengthen cash flow. Next is inventory turnover. For the advantages is high turnover reflect strong product demand and effective inventory control. And disadvantages is very high turnover can cause stock shortage during sudden increase in demand. And we can see here the best year for inventory turnover is 2023, which is the most efficient inventory utilization. And overall, the company demonstrate excellent inventory control, minimizing holding costs and avoiding overstocking. Next is account payable turnover. The advantages is timely payments, strengthen supplier relationship, and business reliability. For the advantages is paying too early may reduce available cash for daily operation or investment. ACT base year is 2022, which is the highest supplier payment frequency. Company ability to pay supplier faster over time indicates strong liquidity and good credit standing. Next is account payable turnover in day. The advantages is longer payment period, improved liquidity, and cash flow flexibility. The disadvantages is delay payment may damage supplier trust and business reputation. And the best year is 2022, which is the faster supplier payment. The overall trend remain positive, indicating responsible supplier payment practice.
I'm Siti Zulaikat Rahim. I will continue with the other ratio. Firstly, the fixed asset turnover ratio rose from 4.6 times in 2020 to 9.5 times in 2024, showing improved efficiency in using fixed asset to generate sales. This reflects stronger operational performance, though it can be influenced by depreciation or asset sales. Next, the total asset turnover ratio increased from 2.24 to 3.41 times, meaning the company became more efficient overall in managing its assets and generating revenue. The next profit margin ratio also improved steadily from 1% to 2.9%, showing stronger cost control and profitability. However, it can be affected by non-operational factors like financing or accounting choices. Lastly, the gross profit margins fluctuate slightly from 12.14% in 2020 to 11% 5.81% in 2024, with 2020 as the best year. This shows consistent cost management, though rising costs of a goods sold remain a challenge. Overall, this ratio indicates that Petronas Dagangan Berhad has improved both efficient and profitable over the years despite some cost pressure.
My name is Nofarana Alia Natasha binti Muhammad Fahmi. For the past 5 years, Petronas Dagangan Berhad show a strong improvement in profitability and efficiency. Firstly, the return on asset increased consistently every year. This means that the company become more effective in using its asset to generate profit, especially after the pandemic. Net return on equity remains stable through the 5 years, showing that PDB constantly delivers a return to shareholder even though equity increase over time. For operating profit margin, the trend improves year by year. This shows that the company is managing its operating costs efficiently and turning more of its sales into profit. Lastly, the debt ratio initially increased as the company used more debt to support operational, but later improved, showing that better over its liability. Next time, interest earn ratio increased sharply from 25.10 in 2022 to 118.52 in 2024. This means the company earnings were more than enough to cover its interest expenses, showing strong financial stability and effective management. Next, book value per share stably from RM5.71 to RM6.11 indicate that the company continues strengthening its financial position and create more value for shareholders through consistent profitability. Lastly, earnings per share grew from 28 cents in 2020 to RM1.9 in 2024, reflecting higher profitability and strong returns for investors. Based on our analysis, Petronas Dagangan Berhad is worth investing. The company shows strong and consistent financial growth with increasing profitability, efficient asset management, and a solid ability to meet its debt. Besides that, PDB is expanding into renewable energy, EV charging, and digital innovation, while positioning it well for the future sustainability. This factor proves that the company has strong long-term potential and is a reliable choice for investors.
My name is Nurul Batrisha binti Samsudin. This is the SWOT analysis for Petronas Dagangan Berhad. For strength, Petronas Dagangan is a very well-known and trusted brand in Malaysia. It has many petrol stations and kedai mesra stores all over the country. The company also has stable income, good cash flow, and run its business well. Besides that, Petronas Dagangan focus on green energy and digital technology, which help the company grow in the future. For weaknesses, the company still depends mostly on selling fuel. It is also affected by changes in oil prices. Because it has many stations and big delivery network, its operation costs are high. For opportunities, Petronas Dagangan can grow by investing more in renewable energy and EV charging stations. It can also use digital apps and online systems to make customers' life easier. The company also has a chance to grow its non-fuel business, such as kedai mesra stores. For threats, the company faces strong competition from other fuel brands like Shell and Petron. Oil prices keep changing and can affect profit. The company also faces strict environmental rules and uncertain economic conditions that can affect sales.